Hello guys and welcome again to my channel. So I have already some videos related to this series, and if you can remember in our last episode, this is the thumbnail of the last episode. So if you wanted to check it out first, you can go to my channel and go to the playlist. So this is the thumbnail. And of course, I have a lot of videos already from the very beginning of this topic. So we started with what is accounting. So you can go and check my channel, select playlist, and I guess it's in the playlist of fundamentals of accounting. Okay? So in the past episode, I emphasized that the journal entries and the adjusting journal entries are the most difficult part in the accounting cycle, which is why I guess I have to emphasize again, I have to give you another comprehensive problem for the identification of transactions and journal entries. Although this is lengthy, this is much simpler than what we have talked about the BBG Corporation. This is the John Smith Corporation. So John Smith, no, not corporation, John Smith Company. So this John Smith Company will only be the topic for today's episode. So on the next steps, because we are still on the step 2 of the accounting cycle, on the next step 3 up to 10, we are going to use that BBG company. Okay? So what are we gonna do here? So I have some, what do you call this? I have to tell you things first before we go to here. First is that if you find it difficult to understand my accent, you can click on the subtitles. And if you find it slow, my speaking is slow, you can go to the settings of your YouTube application and then select times 1.25, 1.50, and so on. Okay? And I know that the letters of this problem are too small, but I'm going to read the transactions so that you will understand even if you are looking at this episode through your phone or other gadgets. But if you are using some laptop or big screen or a PC, this is what do you call this? Readable for you. Okay? So I'm so sorry. I have to make it like this so that it will fit because we will have some solutions here. Okay? So let's go to the problem. So the problem is about JB Services. It's a newly formed business by John Smith. So John performs professional consulting and landscaping. So the business began on January 2023. So here are the transactions from 1 to 16. Okay? And then the next part of this problem is the chart of accounts. So what are we gonna do? First, we will have step 1, identification of transactions. We will start with that. And then we will go to the effects in the accounting equation. So number 1 is identification of transactions and the effects. So for example, on A is equal to L plus C, what is the effect of number 1? So let's number it. Okay? And after which, if we have identified the transactions, if it is accountable or not, and its effects, the second step that we're gonna do is make a journal entry. Okay? So a journal entry related to the transaction. So there are only 2 parts. So we have here number 2, journalizing. So this is just basically a review on my other episodes. Okay? So, because again, you have to master journalizing, you have to master debits and credits, you have to master identification of transactions and events, because if you cannot, then the next steps in the accounting cycle will be wrong already. Okay? So, the next steps in accounting cycle, I will emphasize, they are procedural in nature only. You don't need analysis with them. In here, in the journalizing and the adjusting journal entries, you have to analyze. Okay? So, let's go. We have number 1. Smith invested 750,000 to start the business. Of course, we have on the asset side, there will be an increase of 750,000. That's the effect. Okay? And then we will have a increase in capital. Right? Because again, our owner invested to us, so our assets will be bigger because our point of view is of the business. And then our debt with our owners is also increased. This capital right here due to investment. So that's number one. That's so easy. Now, next, we have the journalizing portion. So the journalizing portion is you have to look at the chart of accounts and look for the accounts that we're gonna use because we cannot use any accounts that were not listed in the chart of accounts. So as to journalizing, what will happen is we have asset right there. It's increased. And I said to you that if you say, instead of saying the asset is increased, you say the asset is debited, right? So the debit here is the assets. But what particular asset? You look in the chart of accounts and we have there cash, right? So let's debit cash. So that's how you write the debits. Okay? And then the credit is of course the capital. But what particular account? You have to be very exact. The account title that is used here in the chart of accounts is John Smith Capital. $750,000. I told you that you should have some explanation afterwards. So the explanation is investment from owner, right? And if this is the last transaction, you have to put right here an asterisk. And let's assume that's the only transaction for day 1 in January 2023. Okay? Now, of course, there should be a date. However, in the problem, we don't have any date. So there should be a date here before you make a journal entry. Now, we have, what do we call this? A formal journal entry sheet. So I'm going to flash that here. So that's the journal entry sheet. And I have this transaction in the journal entry sheet so that you will see which column are you going to put the date, which column are you going to put the cash, the account title, and the amounts. And of course, in the credit, the account still and the amounts, the explanation, and the number symbol. Okay? So you can see it right here. Of course, I'll take it later. Now, let's go to number 2. So number 2, what happened? Purchase office supplies on account for 15,000. So that means you have a supplies here, 15,000, increase still. Since it is on account, then you are incurring a debt because you have not paid for it. So you cannot put here minus 15,000 in the form of cash because you have not paid for it. What will happen is you will increase the liabilities. Okay? Now, if we go to making of the entries, let's put it right here. You have, first, what will happen? There is a supplies that has increased in the assets. Okay? So, supplies debit. Do we have supplies here? No, we have office supplies. So, again, you can never use any accounts that were not listed in the chart of accounts. So, we have office supplies, debit, 15,000. And then, let's put there 1, out 2, and then 1. So, office supplies, 15,000. And the other one is a liability. But what type of liability? You go to the chart of accounts. So, the liabilities are either accounts payable and salaries payable only. Of course, that is accounts payable. But beware, because sometimes, if the problem is given, and then there is a chart of accounts, some of the chart of account titles are not actually used. Okay? Now, that's number 2. So let's forego making an explanation, because if we do some explanations right here, we will not finish the whole 16 transactions. So let's save the space. But then again, after these entries, let me repeat, you have to make a simple explanation here so that the users or the viewers of this journal entries will be able to determine why is it you have entered this debit and credit. Okay? Now let's have number 3. So let's start here. Number 3. Equipment purchased for 100,000, paying 20,000 cash and remainder on account. So meaning 100,000 equipment, there is a down payment of 20,000, the other 80,000 will be paid in the future. So what will happen is we have 100,000 here in the form of equipment, and we have 20,000 decrease here because of the down payment of cash. And the remainder is in liability. So this is a little bit complex. It's a complex entry actually, because there are 3 numbers that you can see. However, if you summarize this, the assets only increased by a net of 80,000 also, and the liabilities increased by 80,000 also. So the A is equal to L plus C is still balanced. Okay? So that's number 3 in the identification of transactions and its effect on the A is equal to L plus C. So how about we make it into an entry? So the entry would be, of course, equipment, the 100,000, it's debited because it's increased. However, what particular equipment? So that particular equipment is, since we don't have here, we have office equipment, we have landscaping equipment. Of course, it's not landscaping equipment, because if it is landscaping equipment, it should have been set here in number 3. So let's use office equipment. So we have office equipment worth 100,000. And then you have to credit cash for the down payment of 20,000. And then you have to have a liability. Again, the liabilities are only accounts payable and salaries payable in the chart of accounts. So it's very clear that the author of the problem wants you to use the accounts payable account. That is how much? 20? No. That's 80,000. So that's for number 3 already. Let's go to number 4. So number 4, landscaping equipment is purchased for 20,000, paying 5,000, and the remainder is on account. So it's basically has the same, what do you call this, complexity or situation with number 3, although the amounts are different. So we have 20,000. However, we decrease 5,000 because there is a down payment. So this is cash, this is landscaping equipment. And then the rest will be in the liability section. And then we make an entry, of course. Okay. So we have 20,000. That's the landscaping equipment. We have landscaping equipment here. So let's use that one. Debit landscaping equipment, because this is an asset and it increased. So debit landscaping equipment, 20,000. And then you have to credit cash, 5,000. And again, accounts payable, 15,000. And that's it for transaction number 4. Now let's go to number 5. So number 5, we have landscaping. Is this number 4? No. So this should be number 5. So what we have plotted here is the number 5. Landscaping equipment is purchased for 20,000, paying 5,000, and the remainder is on account. Because the number 4, so this is number 5. I'm so sorry. But I will not erase it already, okay? So let's go to number 4. We skipped number 4 earlier. Actually, number 4 is purchase landscaping supplies on account 5,000. So landscaping supplies. So that means, are there any other provision? No. So just purchase landscaping supplies on account 5,000. So that means we have landscaping supplies in number 4, and the liabilities is 5,000 also because there is no down payment. So in the number 4, if we're going to make an entry here, so debit, of course, the landscaping supplies. Do we have landscaping supplies here? Yes, we have. So landscaping supplies. How much is the landscaping supplies? That's 5,000. And then we have accounts payable. 5,000. Okay? Now, let's go to number 6. Paid 15,000 for January's office rent. So, of course, on number 6, the effect is minus 15,000 because you have paid for the rent. And then on the capital side, we have negative also 15,000. But this 15,000 is an expense, right? There are only two things that will decrease the capital. If you can still remember, that's the withdrawal, and the other one is the expense. And in this case, in number 6, that is the expense. Okay? So, in making an entry for this one, we can have number 6. We have on the asset side, it's a decrease in cash, so that's credit cash, 15,000. So let me emphasize that you can always interchange your analysis with the debits and credits. You can start with the credit actually. There's no need to start always with the debit. Okay? So we have credit cash, 15,000. And then we have the expense. And as you see, since the normal balance of the capital is credit and it decreased the capital, so that means expenses are debit in nature. So the question is, what is this particular expense? So we need to take a look at the chart of accounts, and we have the rent expense. So let's use that. So that's the entry for number 6. Let's go to number 7. So number 7, consulting services provided to clients on account 50,000. So that means you have already provided for the consulting services to the clients, but they did not pay yet. So that is what we call as accrued revenues, if you can still remember on the adjustments in the previous episodes. So that is an accrued revenue. And normally, if there is an accrued revenue, what will happen is you will uh, record an asset, which is this 50,000, but it is still considered as receivables or accounts receivables. But then again, you will also have a revenue already. So your capital will increase due to this revenue. Because again, you record revenue if you have already delivered what you ought to deliver, like services or goods. Okay? So that's the entry in the A is equal to L plus C. How about the journal entry? Of course, you will have accounts receivable. So check on the chart of accounts if there is an account like that. And there is the second account. So we have accounts receivable. How much? That's 50,000. debit because that's an asset. And then we have to credit the revenue. Okay? And if we're talking about number 7 here, consulting services, you have provided consulting services. So we have only two revenues in the chart of accounts, consulting service revenue and landscaping service revenue. So that's very clear. That's consulting service revenue worth 50,000. And that's the entry for number 7. Now let's go to number 8. Number 8, landscaping services provided to clients on account. There is no amount right here. And maybe I forgot the amount. Let's see the original problem. The original problem states that, wait. The original problem is 25,000. 25,000. Okay. Let's put it right here. 25,000. So, if that's the case, still, it's the same. You have here the receivable, 25,000, and we have revenues, 25,000. So you have to practice this, guys, so that your analysis will become much better and much faster. Sometimes when you see the transaction, you don't need to identify the transactions and its effects already, because automatically the journal entry will come to your mind immediately. But for today's video, I'm going to assume that you have not yet practiced, which is why we started with this, and then we have to go here. Okay? So let's have the entry for number 8. For number 8, that is, again, debit accounts receivable. How much? That's 25,000. And then, landscaping service revenue already. Landscaping service revenues. How about number 9? So as you can see, it's stated here, you have received, or the company received, 30,000 from clients for consulting services provided. So, do not assume that this 30,000 from clients for the services that you have already provided is related to this number 7 and number 8, because it's not the case here. Because if ever that is the intention of the maker of the problem, he should have said, or she should have said, received collections from account clients for consulting services provided. Something like that. So you do not assume unless otherwise stated in accounting. Okay? Sometimes the students are confused. Sometimes they are relating this received 30,000 from clients for consulting services provided to number 7. In which, in number 7, it is still an accounts receivable, if you can see. So they are treating number 9 as the collection from number 7, which is not in this case. Okay? So, it's a separate revenue. So, of course, you will have an increase in assets. Oh no. An increase in assets of 30,000, and then another revenue. But the difference between number 7 and 8 and the ninth is that in the ninth, that is already in the form of cash. Okay? So we have number 9, debit, cash already, because we already know that it's in the chart of accounts. So no need to look at the chart of accounts always, especially if you have already entered an account here and you remembered. So we have cash, 30,000. And then since it is for consulting service revenue, you put consulting services revenue. 30,000. Okay? Now let's go to number 10. Before we make an entry, let's analyze number 10. Number 10, received 15,000 from clients for landscaping services. It's basically the same with number 9, but in another type of revenue and another amount. So we have 15,000 and then 15,000 also here for revenues. Because again, what can make the capital increase? The capital account can increase only in two types of transactions. The first one is the investment from the owners, and of course, the revenues. Okay? Now, next, let's make an entry. Of course, that is cash, 15,000. And we have landscaping revenues, 15,000. So that's on number 10. Now, let's go to number 11. So number 11 is paid salaries to employees for the month 25,000. So that is an expense, right? Because you paid salaries to the employees for the month. So what will happen is, of course, the asset will decrease 25,000. And of course, the capital will decrease also due to expense. Now we can make an entry in number 11 already. So let's make it here. Number 11. So, of course, you have credit cash because you have paid your employees. And of course, the expense will be the salaries expense. $25,000. Okay. Now let's go to number 12 immediately. You paid for 7,000 utilities. So number 12 is just the same. It's an expense. So it decreased our asset by 7,000. And then another 7,000 decrease here due to an expense. So what is the entry for number 12? We have debit utilities expense. It's on the chart of accounts. How much? That's 7,000. And then credit cash, 7,000. That's it. And on number 13, it's the same. Although it's another type of expense. So we have 3,000 for advertising. That's a decrease. And an expense here. So the entries for number 13 is actually just advertising expense, worth 3,000, and then credit cash, 3,000. Number 14, John Smith withdrew 5,000 for personal reasons. So we have a decrease of 5,000 and a decrease in capital. But this time, that is due to withdrawal. Okay? So what will happen? Number 14, credit cash. How much? 5,000. And then on the chart of accounts, we have John Smith drawings. 5,000. So this should be indented. So we have here 5,000. Last two items, we have office equipment has an estimated useful life of 5 years and a salvage value of 10,000. So you have to calculate the depreciation expense for January. So the office equipment that is being talked about here is in number 3. So that's purchased for 100,000. So meaning the historical cost is 100,000. But after 5 years, the useful life, it will have a salvage value only of 10,000. So meaning 90,000 is the depreciable amount. Wherein it means that the 100,000 will decrease by 90,000 after the useful life. After it has been used for its useful life of 5 years. Okay? So, since this is for 5 years, let's get the per year. So, we have 90,000 divided by 5, we have 18,000. So, 18,000 per year. But the problem is, we are not looking for the whole year because the depreciation, according to here, you need to calculate depreciation expense for 1 month only for January. So meaning, you have 18,000 divided by 12 months. And you will have 18,000 divided by 12 months. You have 1,500. So we have here number 15, 1,500. And 1,500 here also. Okay? But this is an expense. Because depreciation expense is an expense. And we have that here. So we're going to use that in our entry. Depreciation expense. How much is that? It's 1,500. And then credit instead of the office equipment. Again, let me emphasize, you cannot use the office equipment account because if you do, then the office equipment of 100,000, the original ones, will not be preserved. It will be decreased from time to time. So instead of using office equipment as the credit, you use the contra asset accumulated depreciation office equipment. So the entry is accumulated depreciation office equipment worth 1,500. And that's it for number 15. And on number 16, it's basically the same. However, the amounts are not the same because we're talking about the landscaping equipment. According to here, the landscaping equipment, which is in number 5, yeah, that's 20,000, the historical cost. And then, it has a salvage value of 2,000 only at the end. So that means, if this 20,000 will be used during its life, it will decrease by 18,000 because of physical wear and tear. Okay? However, this is for the useful life already, which is, according to the problem, that's 4 years. So after 4 years, it will be deducted by 18, it will become 2. And it will be salvaged for 2. Okay? So 18,000 divided by 4 years in order to get the depreciation per year. We have 4,500. But then again, we're not looking for the annual depreciation. We're looking for the monthly depreciation for the month of January. So let's divide this by 12 months. So 4,500 divided by 12 months, that's 375. So if that's the case, the entry for number 16, you have depreciation expense. How much? You have 375. And you use accumulated depreciation for landscaping equipment. landscaping equipment, 375. But let me repeat also, let me emphasize that when you make a journal entry, you should use the full account title, not like this. So I'm only using this in order to economize the space. Okay? But when you make a journal entry in real life or in our tests or in the tests of your professors, you have to spell it out. Okay? So that's a review on the identification of transactions and the journal entries. So there are no adjusting journal entries here except for 7 and 8, which are all accrued revenues. Okay? So, again, the most difficult part of the accounting cycle is the journal entries and adjusting journal entries, and you have to master it. Okay? So, let me give you a last hint. How are you going to recognize if some transactions are to be adjusted? So, the clue terms are late payment and advance payment. So if you can see that there is a late payment, maybe on your part or maybe in the customer's part, there will be an adjustment. So that is what we call as accrued expenses. If it is in your part, you are late in paying for expenses that you have already incurred. Okay? Accrued revenues, if the customer is late in paying you when you have already delivered your services or goods, so that's accrued revenues. As to the advance payments, it could be your advance payments, like the prepaid rent and etc. So there will be an adjusting entry for that. And if the customers give you money in advance before you have given them the services or goods, those are considered as deferred revenues or unearned revenues. You get me? Of course, there are some adjustments that are very clear that you don't need any clue. Like for example, depreciation and doubtful accounts. Okay? So that's it for this video. Next will be, we will try to see what are the questions if ever you will be asked in a multiple choice form of questions related to journal entries and adjusting journal entries. Okay? So see you on the next one. So and thank you for watching. And subscribe and like also if you want to. But like it nevertheless so that the algorithm of YouTube will, what do you call this? Love this video. So thank you again. See you on the next video.